Good evening and welcome to a brand new show of Markets Tomorrow. On expected lines, courtesy Global Q's, Indian markets managed to bounce back, but durability, sustainability, still a big question mark.
Yes, lots of questions as the markets did snap that 3-day losing streak, but we'll get on board then. Our experts will be guiding us over the next 30 minutes. Joining in on the show today, we've got with us Hitendra Dave, Head of Global Markets at HSBC India. Dipan Mehta, member BSc NSE, joins in with his market views, and Ashwini Gujral, fund manager ashwinigujral.com, is with us on the charts.
A look at market action. Indian markets did manage to snap a 3-day rally, courtesy global strength. There was some buying and there was some strength in benchmark indices on a closing basis. What differentiated the markets today? Largely autos, banks, and there was some smart buying in select PSU names as well. Mahindra & Mahindra clearly emerged as the star story of the day. That stock hit a record high after brokerages upgraded their price target for Mahindra & Mahindra post strong set of numbers. Infosys bucked the trend in the IT sector. Even though TCS and HCL Technologies, they came down, Infosys was the sole large cap gainer in the IT space. It was a decent day for cement, nothing very powerful or great about it, but stocks like ACC, Ambuja and Ultratech Cement, they managed to close in the green. On the losing side, however, there was some profit booking in pharmaceuticals. Otherwise, the market bread today had a rather strong session.
Yes, and when we look at the broader markets too, it was fairly encouraging to see that the broader markets were pretty much neck to neck. In fact, it was at one point that we were very comfortably outperforming the frontline indices. So you did see the advanced decline ratio also, which was very healthy for the broader markets. In fact, quite a few stocks were in focus today on the back of numbers, on the back of news, etc. SAIL put out a decent set where you had the top line growth, which came in steady by 10.5%. You had the profit growth, which was also strong this time around, and that came in at 530 crore rupees. The margins also expanded to 10%. Meantime, Electrosteel Castings and the counter saw a great move on the back of its numbers. Close to 20 crores is what it delivered in the quarter, vis-a-vis a profit of 55 lakhs. Net sales though were a little tepid. Very discouraging quarter for Venky's India, and the profits were down 78% and came in at 1.6 crores. Very tepid in terms of the top line growth as well, just up by about 1.5%. IDBI Bank plunged in the session after it came under the CBI scanner for approving the 950 crore rupee loan to Vijay Mallya owned Kingfisher, and that counter was clearly pummeled in trade today. The Adani and group stocks, Adani Enterprises, jumped a 5% growth intraday trade, and it's reported a stellar set of numbers, swinging into profit on the back of higher sales volumes in the power as well as the mining verticals. It was Sun TV which had a dismal quarter, and the profit growth was absolutely abysmal, up by 1.2%, net sales discouraging, and margins also on account of the losses in the IPL came in lower. But Nikunj, all in all, we have seen the market action starting, but from, the interactions that you've been having, is this a start of an up move or just a little bit of, is seeing a little bit of uptick after the kind of dropping we've seen of late?
We fell very hard last week, so markets were due for a comeback, and they've made a comeback courtesy global strength. There was a gap up start, but after a gap up start, there was very little follow buying. Market breadth was reasonable, that's about it. So global Qs have rescued us today. What happens next? Anyone's guess. Are there any triggers in the system? The answer is no. Is there a big policy announcement which is round the corner? The answer to that is no. Have macros improved dramatically? Well, yes and no both. So there are again no big policy stroke local triggers in the system which will generate upside momentum. At best, flows also a bit patchy, and clearly markets in the short term will be a function of global cues, and globally, unfortunately, markets are in a risk-off mode, and that is something which we must recognize.
Yes, and perhaps tread with a little bit of caution in light of the same. So Dipan would like to get you in with the discussion. Do you think that that's going to be the next big trigger directionally for the markets, that it's going to be the global factors guiding us? And given the kind of environment with the geopolitical tensions might have abated marginally, but still are very much prevalent, that one should be a little bit cautious?
Yeah, absolutely right. I think in the short term, that is what is playing on the minds of traders at this point of time. And there is fear that, some geopolitical issue may come back and, blow up on all our faces. And you could see kind of a sell-off, mini sell-off in our markets. and that has been responsible for the correction of which we have seen over the past few trading sessions. So no doubt, I think long term, the market remains excellent, and we have seen that gradually macros are improving. I did hear Nikunj say that the macros are, some of them are good, some of them are not so good, but my sense is that we are seeing a gradual improvement in the macros over there, and there's a strong likelihood that economy will pick up over the next few months or so. But there are two factors, the geopolitical part, and secondly is that I think the markets run up without a correction, and so I think technical considerations also may come into play, because of which we are seeing this kind of a soft trading pattern.
Ashwini, courtesy global cues, Indian markets managed to close in the green. But what happens after today's feeble comeback?
Well, a feeble rally should continue, and that too courtesy global cues. The market is going through a phase of contraction. We had big expansions in the phase between March and June. Expansion as in the range expanded. Now we are going through a phase of contraction. Maybe another month or so should be more should be taken as a contraction, and then probably we are building up strength for the next large move. But clearly today's move did not show that there is great momentum and new highs will get made. Maybe 100, 120 points on the upside, and then again we start having a downswing. So this is a phase of the market where certain stocks will shine every day, but broadly the market is just basically narrowing its range and compressing before the next move.
Just wanted to talk a little bit about some of the earnings also that we saw today, and GAIL in fact did put out its numbers earlier in the session, and you had the net sales growth which came in higher by just about 3.4%, profits slumped 23% to 621 crores. Sale from the metals basket also delivered its earnings, and it was a fairly encouraging set of numbers. You had the profits coming in at 530 crore rupees, and top line growth this time around was fairly healthy. But just wanted to get you in, Dipan, on what you made so far of the kind of earnings that have been delivered.
Well, our view is that the earnings season has been a bit of a disappointment, and especially considering that stocks have rallied significantly over the past 3 months or so. So they are not exactly cheap in terms of valuation, and some amount of response had to come through from the corporate side in terms of delivering better returns, but that I think is lacking at this point of time. The broad conclusions are that although sentiment has improved, I think at ground level volumes have not picked up, and there are severe challenges in terms of growing the top line and managing the cost inflation which is underway. So we saw that across industries, be it cement, be it FMCG, especially banking, I think there was some amount of stress on their earnings, and growth rates for a lot of the blue chip companies also does seem to have slowed down over here. But no doubt there have been a few winners on and off. I mean, within the sectors as well, one or two companies did outshine. So that keeps the investors interested in the sector and those companies. But by and large, I think if you ask me, we came out of this earnings season with fewer investment ideas than we went into it. So from that point of view, it was a bit of a disappointment.
Hitendra, do you think Indian markets for the moment are stuck in a range, and till the time we don't get a clear direction from the new government, the markets are not going to go anywhere?
Yeah, I think it increasingly does appear that I think the euphoria around the elections and the expectation of a strong and decisive government is reflected itself in the kind of run-up that we've had. Post that, I think initially there was expectation that there would be something which would come in the budget. Now budget sort of consolidated on the fiscal deficit side, but clearly the messaging from this government is that the difference will be in the execution and in the quality and the quickness of decision making, etc. And since it's really too early to come to a conclusion that is visible at this juncture, I guess the market will either wait for some announcements in terms of the 7-8 areas where this government is going to be different from the previous administration and how it is going to be different, and if that story sort of becomes a lot more credible with the markets, then you could have it sort of assess those and react accordingly. But in the meanwhile, given what's happening around the world, given what's happening locally, given continuing issues about the kind of monsoon progress, uncertainty about the policy trajectory from RBI, etc., I would think a fairly rangy environment is what appears to be the case right now.
Ashwini, a call on the Bank Nifty futures today, and how do you see it trending?
Same story with the Bank Nifty. Chances are it remains range bound unless there is cool off in inflation, etc. For the moment, downside is probably restricted to 14,400. Upside, we will possibly not go beyond 15,400. So in this 1,000-point band, I think Bank Nifty is likely to trade. Again, contraction on this because you've seen 5,000 points worth of rally in the last few months. So basically, Bank Nifty does what the Nifty does.
A busy day is what it is, and in fact you've got some big earnings coming out, so it's a heavy earnings calendar from the Nifty 50 companies, Sun Pharma, BPCL, BHEL, among the other names which will be delivering their numbers. Key mid-caps too, so Motherson Sumi, NBCC, Jayaprakash Associates, Wockhardt, all of them will be putting out their scorecard for the first quarter. Macroeconomic data too, and it's fairly hectic. We're expecting the July CPI data along with the June IIP numbers as well. Other than that, of course, we will be watching out on the frontline index. We have seen a fairly steady rally in the markets today, but we'll be looking to see whether 7,500 will be the base for the Nifty. And the brokerage reaction also to the Tata Motors numbers. And I think other than monitoring the frontline index, big earnings day.
Oh, yes, indeed. I mean, what happens to Nifty will be a function of global cues. So I don't think you can really speculate there. But yes, it's a big day for numbers, and especially it's a big day for some of the large cap performing names. Be it Sun Pharma, BPCL, from the mid-cap space, you've got Motherson Sumi, you've got NBCC. So tomorrow would be a real test of expectations because most of these stocks have already run up in anticipation that Q1 numbers will be strong, in anticipation that the management commentary would be bullish. So tomorrow you will definitely see a lot of chop and churn, and you will have to focus individual stocks because numbers surely have impacted stocks. At least we've seen that in last 2 or 3 weeks.
Indeed, they have. So we will be watching out very keenly for those numbers. I'm, just going to take you through a few in terms of Sun Pharma. That from the pharma basket will be doling out its numbers. And, remember the reported PAT is seen at close to 1,400 crore rupees. They booked a one-time loss of 2,518 crores for the Protonics litigation, pardon me. And we are expecting that the net sales this time too will be higher at 4,170 crore rupees. Other than that, of course, we'll be watching out for some of the other big numbers like BHEL, and we're expecting that the top line growth will be lower by about 4%. No improvement is seen in execution this quarter. No major projects were announced in the first quarter. Your margins are expected to remain stagnant, and the profits are seen at 337 crore rupees. Dipan, come in here for the overall capital goods space and what you've made of the earnings that they've delivered so far, and how do you expect BHEL to fare vis-a-vis what L&T delivered, because that was a big disappointment.
Yeah, I think that was part of the problem of the earnings season, that we had big misses coming through from the capital goods sector. It started with Thermax, which came out with a disappointing set of numbers, and then L&T also was not that encouraging. So I think that markets have hardly built any expectations for BHEL. Clearly, I think the capex cycle upswing is still a few months away, and maybe the order book needs to get built up a bit better, and we need more project starts to actually start taking place before we see the revenues of these companies growing. Unfortunately, I think the likes of L&T had issues with their overseas projects as well, so that's a bit disappointing. So across the board, I think mid-cap, large-cap capital good has disappointed, and that was one of the stories which investors had been chasing right through the past 2-3 months before the results came out. My sense is that long term I think is great for these companies, but I think maybe 1 or 2 more earnings season would be a bit challenging.
Ashwini, do you think autos across the board are in a sweet spot, and irrespective of global cues or local cues, do you think autos will continue to motor along smoothly?
I think this particular rally will be led by autos, and chances are that a lot of other sectors may not participate. So the first day has shown that autos should lead the way. So chances are most auto stocks will hit fresh highs during this rally itself, and that's the kind of participation you need in a weak rally. So if you could take away something today, that was that you need to participate in auto stocks in the next 3 to 4 days.
They've been coming down Infosys, and this is one stock which surely has surprised everyone today. On a day when in general IT stocks were in a profit booking mode, Infosys managed to buck the trend. It was the outlier, 3700, almost 3600 for Infosys now.
Yeah, I think one can't really say what specifically caused the stock to move up today. But by and large, I think with the takeover, with Mr. Vishal Sikka coming on board, him taking over the helm of the affairs of the company, I think expectations are getting built up, and whatever management commentary has come through over the past few weeks around the time of the earnings, as well as once he has taken over, that has all been taken in very positively by the street, and broadly I think there is some deal of buzz, excitement getting recreated in the stock, in the hope that the winning ways of Infosys would be back, and they would start at least first performing as per industry averages, and then perhaps trying to do better than the industry. I think others in the peer group have shown that they can grow at high growth rates despite the base at which they are in, and it's a matter of time before Infosys also comes back to its historical growth rates, which is why we are seeing that interest is gradually building up in the stock. Maybe I think a couple of quarters you may see some kind of sideways to flat performance, but thereafter I think the new management on all their efforts should come into play. So I think slightly positive time coming in for Infosys over the medium to long term.
I just want to touch upon what some of the metal names like Coal India are likely to deliver. Operating margin is seen steady, and the revenue growth, of course, will be led by the rise in sale volume. So that's seen up by 6.8%. Profits expected 4,100 crores. And NMDC, the higher sales volumes once again is going to be the driving factor. And the sales volumes are seen higher by 17%. Operating margin seen stable at 66.5%. And those are the estimates on the profit and the sales front. Hey, Narendra, just wanted to get you in with, over the next 6 months, what your outlook is on the markets, given that the global cues are looking a little bit uncertain.
I think as far as India is concerned, I think the fact does remain almost, there is a widespread acceptance of the fact that we've had while on the political side developments have been tremendously positive, some of that to reflect itself in economic activity levels, and therefore through that in the corporate performance levels is a 12 months to 18 month story. So in terms of, given the fact that you've run up already quite a bit on the back of the political developments, but your underlying earnings and underlying economic activity levels still reflect the problems of the past, which is of an over-leveraged balance sheet, weak investment demand, relatively muted consumer demand as well, you would have to say that I would be quite satisfied, frankly, if over the next 12 months or so, markets broadly trade range bound. It allows international investors continue to believe in the India story, which allows deleveraging, as I emphasized in the early part of this interview. And if, because then the platform thereafter gets formed. So I don't think, having had the kind of run-up that we've had, we should be worried at all about the fact that we are now range-bound. I think we should be happily range-bound, frankly.
Let's identify some of the top stocks to keep on your radar.
That's right. Strong performance coming in for, Tata Motors led by Jaguar Land Rover. And, let's start with the consolidated results. Clearly, we were expecting a revenue figure of close to 62,500 crores, and they have posted a number of nearly 65,000 crores in terms of revenue. That was a jump of over 35% on a year-on-year basis. If you look at the consolidated EBITDA picture on a absolute basis, clearly EBITDA incoming in excess of 11,000 crores versus our expectation of 9,400 crores. And if you look at the profitability also, that has jumped by over 200% on a year-on-year basis. If you look at the consolidated margin picture also, that has come in at a strong 17.2% versus our expectation of close to 15%. So almost a 220 basis points margin beat versus the market expectation. Also talking about Jaguar Land Rover, and that has clearly helped the performance for Tata Motors in the first quarter. We have seen the JLR revenues coming in at a strong 5.3 billion British pounds. So that was a jump of over 30% on a year-on-year basis. And if you look at the EBITDA margins also for JLR, that have come in at a strong 20.3% versus the market expectations of 16.7%. So almost 450 basis points beat versus the market expectation. And if you look at the EBIT also for JLR, that has come in at 8,700 crores. So clearly on the JLR front, the numbers have been extremely strong. Remember, during the quarter, the contribution from China in terms of the volumes were 28% versus 24%. So almost a third of sales coming in from the China market, which has been the profit driver this time for JLR. And the management is quite hopeful that the new launches in the domestic market and the overseas market will surely drive the growth for Tata Motors going forward.
Ashwini, how do you propose one should trade tomorrow?
Oro Pharma?
Oro Pharma and your trading ideas. Oro Pharma was a good call from you. Remember, you identified this one in the morning. So great call.
See, Aurobindo Pharma has been in a bull market since last couple of years, and it's not a pharma sector bull market, although that has also contributed. So a fresh move has started today. Chances are we'll soon head towards 900. And this is one pharma stock that you can buy regardless whether the pharma space is rallying or not, because it tends to be moving on its own. As far as calls are concerned, M&M Financial is a buy with a stop of 252, target of 272. Infosys is a buy with a stop of 3500, target of 3650. And Axis Bank is a buy with a stop of 370, target of 395.
Thanks for that, Ashwini. And speaking of pharma, take a look at some of the other names like JB Chemicals clocked in a 12% gain in today's session. Very impressive. Shasun Pharma was fairly steady from the afternoon trade, and that one too sustained with gains of 9% by the time we shut shop. And of course, we flagged off Aurobindo Pharma, which was a star performer. Dipan, which way of the market are you tilting toward? And do you think that now the flavor in cyclicals is emerging, or would you stick with some of the pharma or defensive names?
So I think if you look at the earnings season, I think the best results came from the defensive, that being the pharma companies and a few select IT companies and other exporters. So my sense is that maybe for the next quarter or two, so if you're looking at the medium term, I would still bet on the defensives, the export-oriented sector. And maybe, if you have a slightly more long-term view, 6-12 months down the line, then the domestic oriented and the cyclicals would do well. But I think investors are best off having a diversified portfolio and have a good balance between the export oriented sectors and the domestic oriented ones. And within the domestic oriented ones, we discussed the auto industry. I think that's one spot, one sector we can be overweight on. And then there are a few select FMCGs also. I think Imami came out very good set of numbers. So there are, even within the domestic oriented companies which have come out good quarterly performance. And investors could focus over there and build some positions gradually, perhaps at corrections, maybe at even these levels.
Right, and let's get some closing comments from Hitendra. Hitendra, at this current juncture, what are your top themes? You will not get into stocks, but in terms of individual groups or sectors, what are you bullish on? Where are you allocating capital?
So I guess at this juncture, you would have to say that things which are linked to government policy, wherever, if you believe that there is going to be significant amount of improvement in decision making with respect to, let's say, power sector or respect to coal, and so on and so forth. I think though, where a lot of capital is stuck, that capital is dead capital right now. It's affecting banking balance sheets, it's affecting the balance sheets of the respective companies and the promoter groups. I think those, I would just be very closely watching developments around which sectors are identified with this government for for announcements on a tangible change in decision making, you know, whether it's through legislative action, whether it's through actual quicker parliamentary or individual ministry or departmental decision making. I think it's those where I would think that the investors need to focus on.